Hey, everybody. Before we get going on today's podcast, I want to remind you that the registration is open for the AgView Executive Business Conference held in Phoenix, Arizona this year, January 21st through the 24th. Go on to the AgView Solutions website, agviewsolutions.com, and click on to the conference tab, and you'll be able to go in there and look at all of the great things we have planned for this year's conference. A ton of great educators that'll be there. And so go in and check it out. We look forward to seeing you at the conference this year. Thanks. Welcome, everybody, to another episode of the AgView Pitch. We are heading into a new marketing week. It's actually the last week of September already, and we've got with us today Jared Creed. Jared, how's it going?
I'm good, Chris. As always, thanks for the invite.
Yeah, I really appreciate you being on. It's always good to get you on when some of the action's starting to happen in the farm, because you touch a lot of operations just as we do. What are you hearing on early harvest? Are you hearing anything good, bad, and different?
I'd say the easiest way to summarize it is that early corn that has came off is not as good as expected.
Mm-hmm.
Early beans that have came off are better than expected. And the better than expected on beans needs to be clarified because the expectation was already pretty high. So I would say so far we're into some pretty special beans as a whole. With corn, the verdict's still out. Hopefully some of these yields will climb up on the later maturities, later planting.
Mm-hmm. It looks to me like, from what I've heard, and then even in our own operation too, we harvested some early 99-day stuff, and our geography is pretty early maturity, and we definitely saw more rust in that, and it was sprayed with fungicide, and then we left an area not sprayed, and we're seeing about a 35 bushel advantage to fungicide application. So I think this is one of the years not to have a scarcity mindset and be sure to do it kind of like some of the agronomists always say, never give up on a crop. And I think that was a prime example this year.
Well, we were fed a little tidbit this last week that this has to be taken with a grain of salt, but some in the know folks from a crop protection standpoint for fungicide specifically, 2023 corn crop had an estimate of having about 44 million acres of fungicide on it. Last year, dropping down to 40, with the expectation that we dropped in another 2 or 3 million this year.
Mm-hmm.
And then the real question becomes, well, we just planted 9 million more acres of corn than last year as well. So
Mm-hmm.
has to be taken with a little bit of grain of salt. But man, had an old timer just the other day ask, are we watching a black swan unfold in front of our eyes? And we just don't know how to track it.
Right.
And that would be the Southern rust piece. And I can agree with what you said. Most guys, it's a 30 to 50 bushel swing pretty easily.
Mhm. Yeah. So with all that said, let's transition that over to the implication potentially on the markets, with where the USDA came back and they trimmed a bit from their high number on corn, and then we'll talk about beans here in a minute. But stay on corn. So with all that said, in your crystal ball, do you think we have the opportunity to see a couple more bushels shaved off of it? Will the USDA do that, or will they wait even a little longer to get very aggressive on trimming?
I think there's a high probability we see another adjustment in the month of October, but
Yeah.
after that, it's not going to be much movement
Right.
until we get to January. In the month of October, or excuse me, in September, they use implied ear weights. October, we should see actual ear weights. But the real story from the report last week was pushing acres up again. And there was data out there within the FSA stuff to suggest that acres could go up another 2 to 300,000 from where they were. But few and far between people saw a 1.5 million bushel further increase. So, hey, can a yield come down a bit? I think it can. Can our acres continue to climb? Maybe a tad bit. At this point in time, it's just more important that we continue to stay on the pace of the demand that we have currently. We have
Mhm.
we need to get some rain on the river, to be honest with you. So you talk about corn yields, you talk about what the USDA might do from a corn yield perspective. What's that mean to price? Well, it's not all that supportive for price if we have the demand for it and we can't move it.
Mhm.
And we need to get some rain on the Mississippi River to avoid you know, screwing up what can be potentially a record export program for the month of September, October, November, December.
Mhm. So transition over to soybeans with the same mindset, sort of. And by that, what I mean is, it sounds like the bean yield's probably going to be in there, from what early indications are showing anyway. So making that assumption, Demand obviously is the issue. We've had good demand on the corn side, not so much on the bean side, and a lot of uncertainty. If some demand would come out of the woodwork a little bit, even though the bean yields look like they're going to be really good, how much positivity could that put into the price outlook, or do we, you know,
Well, domestically, we don't really have any room to pick up any additional demand. We're already forecasted to crush 2.6-ish billion bushel of beans.
right?
That's a big, big number. The export piece, our export book excluding China is still okay. Without a Chinese soybean program, it just basically removes the opportunity to move a fast 5, 6, 700 million bushel in the month of September, October, November. But the takeaway from that is the long-term demand for beans domestically will be just fine. It's just you got to work through a backlog that's coming to us here in a 60-day stretch. If you did see something develop that China was actually a buyer out of the US for 250 to 500 million bushel of beans, I can't pinpoint what that would mean for soybean price. That could just as easily be 13, $14 soybeans as 10 to 11.
Mm-hmm. Um, I want to transition and keep moving here. We won't keep this one very long, but I have another question too around the idea of October's price discovery timeframe. Um, it looks to me like in some of these cases where guys have these early hybrids, assuming they have optional units, some do, some don't, probably more don't. But looking at these yields, it looks like they're going to be really good on the full season stuff, at least in a lot of cases. And then there's a lot of variability across the U.S. What are you watching during that price discovery period, if anything, between corn and soybeans? Is there anything farmers need to be thinking about, as it relates to marketing? Because you do about the best job of anybody correlating the risk management to the marketing. So what are you thinking? What should guys be
I
watching?
think it just needs to be mindful for at least the next 30 days into the middle of October that if your setup between your insurance elections and your safety nets from an Art County and PLC for the 2025 crop, you don't want to do something that potentially just shoots yourself in the foot. And quite frankly, we've been in that environment for both corn and beans for quite an extended period of time here. You can make the case that the safety nets relative to insurance and farm programs is not as important on soybeans today as it is in corn,
Mm-hmm.
which in theory, the best way I can explain it at, call it 425 December corn. If I'm a 98 million acre corn producer, one farmer in all the US, I don't think I'm doing anything on marketing right now. In fact, I think the majority of their risk today is that corn goes higher between now and the middle of October, not lower. And in that understanding, you don't want to do something that I always have opportunity costs from marketing grain. Did I sell enough when it was high enough? Did I sell too much when it was too cheap? You don't want to add another layer of complicity to it or make it more complex than it needs to be. But you sell something that you don't have risk on and the market goes higher, you lost money. You didn't just lose the opportunity to sell something at a higher price. You took other money away that's coming to the operation. And again, soybeans don't have that same type of safety net feel today. So when you get into the month of October, I you just hopefully we have the opportunity to be patient for 30 days on corn.
Mm-hmm.
I really think we can. Soybean side, you get back to a top end of a 60 cent, 15-month range. I think you just got to continue to dribble those out, regardless if it's
Mm-hmm.
October or not.
Yeah, and a lot of guys more than dribble them out too. It's their cash crop to pay the
Hmm.
line of credit off, and it just get what you can get, put the floor
Yep.
in. I think there's a lot of hope out there for some sort of a payment on the bean side to bail some inventory out, but we'll see.
That that did pick up a lot of rhetoric here in the last couple days,
Yeah, so we'll
talking about taking tariff revenue to create a farm MFE type of program.
yeah. We'll hold off on that. Don't put that in your budgets yet, is what I would tell
No.
people. But we'll see. I want to go back to one thing you said, and it was don't shoot yourself in the foot. I want to ask you a specific question. So there's a bunch of people out there that I know of, and I could be one of them. I probably am, that has locked in a really good basis when those basis opportunities were there and know that we're going to have to deliver some of that corn that is unpriced during the month of October. So if that's the case and some people are listening, what are a couple of specific strategies? They're not recommendations, but just considerations that people would have to manage that, and I know it depends on everybody's situation. People with cost production, if it's above their cost production and they want to take profits on it, have at it. But are there any things that you're thinking of as I ask this question that people might want to consider and how to navigate those basis contracts?
In the event somebody needs to turn it into cash, if they'd have the desire to still be in the market, there is a fortunate piece that our implied volatility in the option market's the cheapest it's been
Yeah.
for a long, long time.
Yep.
And so, in all reality, going out to a March minimum price type of contract is probably the most cost inducive that it's been. And it's going to be the easiest route. If a producer truly needs to liquidate something in the next 30 days, I'm all about that type of strategy. After the month of October, I think that changes a little bit. Some of your safety nets are gone, but that's a strategy kind of to what you're talking about. But you can't um, go down that path until you understand, do I need it or not?
Mm-hmm.
And one of those pieces again is just valuing what's my position on my physical grain, what's my position on my crop insurance today, what's my position within the Art County or PLC program,
Mm-hmm.
and
And
realizing that they're all exposed to the board of trade, but none of them are intertwined.
right.
So if two of them are paying you when the market goes down and one is losing, if those two are making more than the bucket that's losing, you need to be mindful of that because it works the exact same way that, in a rally.
Mm-hmm. And it's managing all that and staying in communication with the lender too, because the lines
Hmm.
of credit, at least from what we're seeing, are a little larger than they've been in a couple of years. And I think the cash flow and bringing that money in, I mean, on those basis contracts, you can get 75% of the money anyway,
Yep.
and so it gets you pretty close. I think my point is making sure that you're having a conversation with the lender on your strategy, just because of what I'm seeing, and I would assume you're seeing the same things. These margins are more than tight. they're
Hmm.
they're not good, and I think just staying in contact with the lender is really a key thing. Like I said, I want to keep this long. What didn't I ask, and what do people need to watch in the next week or two as harvest gets a little bit more robust here?
I can't imagine there's any type of big data points in the next week or two that's going to be worthwhile to be mindful of. Um, I'd just say focus on harvest, stay safe on harvest. We're probably going to see some muddy waters on basis values if we open up this harvest pace and quickly move from, quickly move to 50% harvested by the middle of October. Yeah, we're going to get through some muddy waters on basis values. But after that, I still am pretty optimistic that our domestic and global demand is good enough that we kind of needed the supply that we are producing this year, no matter what.
Mhm.
Um, but there's, I think, one other thing that I wanted to throw out there. You asked about the next week or two, and you mentioned kind of talking to bankers and tight margins. A lot of new decisions are coming for crop insurance here this next year, and we don't have to have this conversation today. But I want to plant a seed in the producer's mind that I'm getting more and more concerned by the day that all the increased safety nets, the increased subsidies, the higher coverage levels, it makes it easier for that bank to be able to loan the money out that is necessary to plant a crop in today's input environment. And my takeaway from this is it's actually acting as a volatility killer for the market. It
Mhm.
makes it financially easier for the masses to plant a lot of stuff because the safety nets are better. And so I think that also means that a farmer doesn't want to be not hopping on that bus. I think you need to be on that bus, leveraging the max subsidized dollars that are there because that's a big, big deal for the next couple years.
Mhm. And now is the time to be thinking about risk management, even though it feels like 26 is a long ways away. There's some tools and things that need to be looked at. With that said, I would suggest, if people want to reach out to you, would you be all right with, some questions along those lines? What would be the
Yep.
best way to reach you? Because I think, you got a lot of good common sense management strategies on that. Work with a number of our clients, do a great job with that. If somebody else wants to, that's listening, wants to get a hold of you, what's the best way?
Sure. Phone's always easiest. Area code 402-680-1744.
Awesome. Well, hey, Jared, like I said, I want to keep this one short and sweet and to the point. I will want to get you back at least by the beginning of the, that third week in a little less than a month. So that because we're gonna have a pretty good idea. We in the third week of October, and pretty good idea what these fall price levels are, and then I think there's gonna be some more stuff we need to talk about from a strategic standpoint. So plan on another phone call.
Sounds like a plan.
All right, sounds good. Thanks to Jared, and thanks everybody for listening. As Jared said, be safe out there. Hope harvest is going well. If anybody needs anything, reach out to us. And with that said, thanks a lot. We will catch you again next time on the AgView Pitch.